Wednesday, March 25th, 2020, Monaco 64, home of alternative economics and contrarian views. Crazy gold markets yesterday. The commercials are running for the hills on the Comex. They're short covering. The April future yesterday traded up to almost $1,700. The cash market or spot market is illiquid. I don't think there's much supply out there, especially for retail investors, for the big investors, for the LBMA market, so to speak. I think that's disrupted as well. People are not trading unallocated gold on the LBMA. And what is unallocated gold? Well, that's paper gold. That's basically like the future on Comex. But why are they trading on Comex? Well, because on Comex, people hardly ever take delivery. And how do I know that? Well, I worked in the futures market for over 20 years. And we were always told, wherever I worked, do not encourage clients to take delivery of gold. And it never happened. It's the same thing for other futures like treasury note futures. People hardly ever take delivery of the underlying treasury. So basically it's a fake market. But I think a lot of the bullion banks, the commercials, are taking this as an opportunity to cover their shorts because they know when things get back to normal that there will be a rush for physical gold. And actually, that makes sense. We've got Goldman Sachs advising their clients to buy gold. Are they being able to buy physical gold, real gold bullion? Probably. Are they buying futures? Maybe. But I think if you really want to preserve some of your wealth in this highly inflationary period we're going into, where central banks are creating money out of thin air willy-nilly. The Federal Reserve, of course, announced unlimited QE the other day. They're buying almost 700 billion of treasuries and mortgage-backed securities this week alone. We've just got news that the U.S. Congress has agreed on a $2 trillion stimulus deal. And don't forget, before all that's been happening in the last 6 weeks or 2 months, Uncle Sam was already running $1 trillion plus deficits. So it's going to get worse, not only for the US, but for every country in the world. Here in the UK, it's the same. They're announcing more QE. The Bank of England government is going to borrow like there's no tomorrow. So yeah, the central bankers and the governments have taken over, unfortunately. What kind of system have we got? Well, it's communism, really. And it makes sense that it is communism because if you look at the 10 planks of the Communist Manifesto, it's going to get even worse. This is, of course, by Karl Marx, 1848. So number one is abolition of private property in land and application of all rents of land to public purpose. I mean, with this crisis, it's going to get even worse. A heavy progressive or graduated income tax. There we go. Abolition of all rights of inheritance. Well, that hasn't happened completely, but here in the UK, it's pretty bad. If you have over a certain amount, they will take about 40% of what you leave to your descendants. Confiscation of property of all immigrants and rebels. Centralization of credit, that's number 5. That's the important one. Centralization of credit in the hands of the state by means of a national bank with state capital and exclusive monopoly. So here we go. So I recommend people look into Anthony Sutton. He wrote a lot of books about how the capitalists or the bankers, if you want to call them, the people who run the central banks, how they helped actually finance the buildup of the Soviet Union and communist China. Anthony Sutton, he's passed on. He used to be a researcher for the Hoover Institution in California. He wrote many books about that. Of course, when he started writing these books and finding out that the West was transferring technology to the Soviet Union, he lost his job there. But if you Google Anthony Sutton, you'll find interesting videos. I think G. Edward Griffin interviewed him, so you'll probably find one of the videos, and he's written a lot of books as well. So this is not surprising. This is happening, unfortunately. I don't think any of us will escape, but by having maybe a little bit of precious metals, we might have a little bit of freedom left in this system by having no debt as well, because all the debt now is going to be owned by the central banks and the governments. By having a debt or a mortgage, you will basically be beholden to the central banks in the state, unfortunately. So back to the markets, back to gold. Yeah, I started noticing yesterday morning that the spread in the spot market was really wide, $5 to $10, and it's still going on this morning. And of course, the commercials, they always have huge short positions on Comex, and I think they know what's coming. So they short covered. For example, right now I've got April gold on my screen here. It's at 1648, and the spot gold is at around 1603. So there's a $40 differential. Of course, if you want to get physical gold now, it's getting more and more difficult. I spoke to Gold Investments yesterday. I have a promo code with them, of course, Maneco64, and they said that as long as they have access to the post office, they will be dealing. The only thing they don't have right now are silver Britannias, but they have everything else. So if you're in the UK or even around the world, they will ship anywhere around the world. Probably not as easy as within the UK. Look at their website. Give them a call as well. They will answer your phone if they're not too busy. But you can do it online as well. Yeah, goldinvestments.co.uk. You get 0.5% discount off the offer price if you use my referral or promo code Maneco64. So yeah, so right now, spot gold, is this the real price here? It's ironic because we thought always that the physical price would be the real price, but right now there is no physical market, it seems. So the futures is actually kind of reflecting where gold should be. But I think when things get back to normal, it will be very hard to get physical gold at these prices that we see on the screen right now. I think those people that were waiting for gold to go down to 1350 or 1400 when it was around below 1500, they're gonna regret that, because gold will probably be trading up to 17, 1800, maybe even 1900 very soon. And with that, let's have a look at what Goldman Sachs has been telling their clients. I know Goldman Sachs has been known to kind of sell their clients ideas that they're trying to get out of. But in this case, I'm not too sure. So let's go through this article. It's from the FT. It says Goldman Sachs tells clients it is time to buy gold. Central bank emergency measures push traders towards currency of last resort. And this is what I've always been telling my viewers and people that I've known for years, that gold is the ultimate form of money or currency. And Goldman Sachs is telling that to their clients. So let's go through the article. It says gold continued to push higher on Tuesday as a recent wave of selling dried up, and Goldman Sachs told its clients the time had come to buy the currency of last resort. So they know what it is. Like other asset classes, gold was hit hard in the recent scramble for US dollars falling more than 12% from its early March peak of around 1,700 a troy ounce to 1,460 last week. The yellow metal started to see a resurgence on Monday, rising by more than 4% after the Federal Reserve said it would buy unlimited amounts of government bonds, and the US dollar fell. It gained another 4% to 1618 on Tuesday, helped by the recommendation from Goldman Sachs, which said gold was at an inflection point and could hit 1800 over the next 12 months. So is it going to take that long? I would say Goldman Sachs and a lot of the bullion banks like Goldman Sachs, they're usually very cautious in terms of their price targets. So this could happen fairly quickly, I would say. They're just giving themselves a bit of, how can I say, leeway there. The record high for gold is 1900, well, 1920, reached in 2011. And this is a quote from Jeffrey Curry, head of commodities at the Wall Street Bank or at Goldman Sachs. We have long argued that gold is the currency of last resort. He's right, acting as a hedge against currency debasement when policymakers act to accommodate shocks such as the one being experienced now. And the other thing as well that people are starting to realize and they're having to admit is that the debt that's been created to basically take over the world, for the central banks and governments to take over the world, and that's what they're doing, like Greg Manarino has said, and he's right, it will never be paid back. So that needs to be palatable, needs to be able to be serviced. So they need to debase the currency because the currency is the other side of the debt. So the only way to do that is, of course, to allow the price of gold, which is the currency of last resort, to rise, or to allow the debt to devalue. And that's what's happening. It's the simple law of supply and demand. The more Federal Reserve notes are created, the more ECB notes, or the more Bank of England notes, the more Bank of Japan notes, the more Aussie Reserve Bank notes are created, the less value they will have against the currency of last resort. And Goldman Sachs knows that very well. And they're telling their clients now. I've been telling you this for the last 5 years. So we're ahead of Goldman Sachs and their clients, thankfully. So there you go. What else is going on? Yeah, so a few things then. This stimulus package is finally going through, $2 trillion through Congress. The Fed has announced massive programs, of course. So that's what's going on. Hold on to your precious metals, of course, physical gold and silver, as Goldman Sachs is advising their clients. As I said, I think, unfortunately, we're going into a period where the central banks and governments are going to own everything. And yes, not even people who have protected themselves by not having any debt, by having some precious metals. We're not going to be immune, but we can still experience a little bit of freedom, I think. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.